He is a dual qualified advocate in India and a solicitor in England and Wales, dealing in technology laws. He has certifications in cybersecurity, blockchain, cryptocurrencies, and is also a certified information privacy professional for Europe. He is the author of the book Cryptocurrencies in India, Not Illegal, but Not Quite Legal. With a huge round of applause, let's welcome our next guest speaker, Dinkar Kalra. Over to you, sir.
Thank you, Shashiji, for the introduction. Now, as has already been said and was very rightly carried out by Upendraji, the topic today is privacy and fintech. What the amalgamation of these two fields now means for our world. Now, I'll start off by talking a little about privacy and then a little about fintech and where they interact and how we need to redefine the zone of interaction now. Now, privacy by itself, in its simplest form, would mean the right to restrict access to one's own self. The fact that you get to decide what access someone else has to your data, how you control your data, how you edit your data, how you manage your data, and to what extent this information can be communicated to others. Now, basic privacy protections like protection against unwarranted search and seizure have existed since the 1700s in the UK and in the US. Europe was quick to take all of these on, and so did all other common law and civil law countries slowly and steadily. However, by around late 1800s, there was the emergence of the instant camera. And around that time, people began to realize that nothing you do outside of your home can anymore be perfect. It cannot be private. It cannot be held in secret because there is an instant camera. Anyone can take a photo of you doing anything, and you lose the right to offer an interpretation of your actions. This is what inspired the seminal piece by Warren and Brandeis called The Right to Privacy, which was published in 1890 by the Harvard Law Review. That is the first actual document that talks about harm vis-a-vis the loss of privacy in today's world. See, I'll read out a quote from that sentence, from that document, which says, "Recent inventions and business methods call attention to the next step, which must be taken for the protection of the person and for securing the individual, the right to be let alone. In today's day, numerous mechanical devices threaten to make good the prediction that what is whispered in the closet shall be proclaimed from the housetops." This laid the foundation for the common law of privacy. It introduced loss of privacy and an attack on privacy as a tort and as a crime. It established a citizen's right to privacy from government and from each other. Now, this right was further embodied in the Universal Declaration of Human Rights, which was adopted by the General Assembly of the UN in 1948. The same thing was done by the European Convention on Human Rights, which was adopted in 1953. The OECD, the Organization for Economic Cooperation and Development, also adopted 8 principles in 1960. These 8 principles then went on to form the bedrock of what is now privacy law. I'll go into these 8 principles in a very, very short format. The first of these principles was the collection limitation principle, which said that there should be limits to the collection of personal data, and any such data should always be obtained by lawful and fair means, and where appropriate, with the consent of the data subject. The second principle was the data quality principle, which talked about the fact that the purposes for which personal data are collected should be specified no later than at the time of the collection, and the subsequent use of such data should be in accordance with the specified purposes. It means that you cannot take data for one reason and then use it for something else. Hence the use limitation principle. Then security safeguards. That principal personal data should be secured always by the person who collects it, not by the person who owns it, but by the person who collects it. They have to protect it against loss or unauthorized use or destruction or modification. For example, if you have certain financial data which is with your bank, if they were not to protect it, it could be utilized to your disadvantage in several ways. They could use it to alter your credit history. They could use it to access your bank accounts, any which way. Then The next was the openness principle, that there should be a general policy of openness, that companies should always tell people what data they hold about you, that people should have access to it, which comes to the next principle, which is of individual participation, that individuals should have the right to access their own data, and they should be able to approach an entity and ask if they hold any data about them. The last is the accountability principle, that a data controller should be held accountable for complying with measures which give effect to these principles. Now, these 8 principles were embodied time and time again in different legislations. They are part of the Convention 108, which is the only international document that provides a legally binding international instrument in the area of data protection. It has over 50 signatories. Sadly, India is not one of them, and neither is the US, I believe. It's mostly the European nations and some South American nations. Now, these documents went on to evolve into the GDPR and the CCPA, and now India's very own proposed data protection law. The success of the GDPR has gone on to show that a delegated law for data protection and privacy is more effective than sector specific regulations like the ones we have at present in India and in the US. The Indian law on privacy itself underwent a sea change when the K.S. Puttaswamy judgment came out, or as you commonly know it as the Aadhaar judgment. The very jurisprudence on privacy changed. It went from being a right that protected other ends to being a right in itself. From that moment on, an individual could claim a right to privacy even if it didn't really alter any other rights that they held. It is no longer a subset of any other right, it is a right in itself. Now we'll move on to the second pillar of this topic, which is FinTech, finance and technology. These two have been merging together ever since the first ATM in the late 1960s. Mobile technology and cheap access to internet has really led to a stage where FinTech has become all pervasive. Now, FinTech is commonly defined as technologically enabled financial innovation that results in new business models, applications, processes, or products with an associated material effect on financial markets and institutions and the provisions of financial services. Now, this is a textbook definition. What it essentially means is that it leads to a situation where financial services and technology have merged to ensure that those who did not have access to financial services, those who were in faraway areas or were not included by the previous systems, now have access because of the technological advancements in this field. Now, this has created many, many new opportunities. This was a field that was mostly, dominated by traditional banks and lenders. Because of technological advancements, we now have unprecedented access to services like insurance, banking, asset and wealth management, and payments. FinTech has experienced prodigious growth in the last 2 decades, and it has now completely transformed from where it started out to be. We now have FinTech in areas which nobody had initially thought of. For example, alternative credit scoring, in which new data sources are scoured to ensure a person's credit reliability. Payments are being redefined. Let's look at Paytm. Cash is on its, people will say cash is on its way out. However, I still always believe that cash will have a way in. There is cryptocurrency as a method of payment. There is insurance tech, which is the use of technology in the insurance sector, which helps, instantaneous settlements of whether they be health insurance bills or automotive insurance bills. And there is the emergence of what I call regulatory tech, reg tech for short. A breadth of these technologies are also being involved to create services which employ basic computer programs such as artificial intelligence and machine learning. Not basic computer programs, but advanced computer programs like artificial intelligence and machine learning. Now, the problem that we see here is that artificial intelligence and machine learning, which are now calling most of the shots in the financial industry and a lot in the fintech as well, require troves and troves of data. India is a data rich country. We have a lot of people that generate a lot of data. We have cheap internet access. We have a lot of smart mobiles. However, we have no central data protection law. What happens is that people are making decisions on a daily basis that have very consequential effects on their credit history, on their access to loans, insurance, and even employment, but they are unaware of it. Now, there are other technologies also that have come up in the fintech space, such as blockchain, the Internet of Things, telematics, and connected cars. These are all things that technologies that involve a certain amount of data. And by a certain amount, I do not mean a small amount, I mean a large amount. But they are all heavily reliant on data in one way or the other. Blockchains are immutable by their very nature. Any data which is embedded on a blockchain will never be altered unless you take down the entire blockchain. So how do we deal with privacy concepts, privacy aspects of something like that? These are all things that need to be addressed at this point of time. All of this innovation in fintech has come at a cost, and most of this cost is usually in the form of data. Big data, which is gathered continuously by your smartphone, which can be used to predict human behavioral patterns, fuels fintech in more ways than we can imagine. It begs, big data begs three big questions. One, what happens if data security is compromised? Second, who or what is held accountable when regulatory watchdogs decide to make decisions made by, take calls on decisions made by artificial intelligence? And lastly, just how do fintechs protect consumer rights? See, the speed and pace at which fintech has advanced has created unforeseen regulatory gaps, which the Federal Trade Commission in the US, the Financial Conduct Authority in the UK, and SEBI and RBI in India are struggling to keep pace with. Technology has always advanced faster than laws. However, at this point of time, we are reaching a stage where technology has so far outpaced the law that we are looking at actual quantifiable harm that is not being regulated or put an end to simply because there is no regulation. So, what does privacy in fintech now mean? Privacy in fintech means that consumers want to be able to control access to their information and have straightforward privacy expectations. Most consumers would even prefer a privacy dashboard where they can access their own information and decide who gets access to what and to what use this information can be put. However, this has one major block, and that block is the entry of technological giants into the world of finance, or tech fins. Tech fins are already data rich. They already have access to all the necessary information. They already have access to all kinds of data about their users. They already were providing services to finance giants. Now they're just cutting out the middleman. And since they're technological giants, they do not really act in an area where the regulation has been created, because regulation was never created for technological giants to provide financial services. It was always created for financial entities to provide financial services. Big tech has become linked to financial market in two very important ways. One is by providing the infrastructure on which financial technology exists and provides services to its customers. And second, by stepping into the shoes of financial entities and actually taking over these services. This has meant that the appetite for data has gone up exponentially. Data already has exploded. There is a famous line that I don't really like to use, but people will go around saying that data is the new oil. It may not be the new oil, but it does fuel the financial and technological industries in ways that were hitherto unimaginable. Especially in a country like India, with low levels of access to credit, insurance, and banking services, we have to be very careful about making trade-offs between the need for such access on the one hand and need for informational privacy on the other. And this indeed brings us to the problem. That being that privacy has now become a dirty word. It is not viewed as an opportunity to breed trust, but as a hindrance to growth. The way we talk about privacy as lawyers is increasingly inadequate because it is too often framed in negative terms. It is seen as a tax on profits, a drain on innovation, a cost to be balanced, and a burden on the individual to fend off these attacks on their privacy. Overall, it is seen as a harm rather than an opportunity. And this is where we need to step in and change the narrative. We should make sure that privacy and data protection are looked upon as an asset by companies and by governments all over the world. I propose two new principles for the fintech sector to adopt. One is trust, and the second is loyalty. See, trust is the willingness to accept vulnerability to the action of others. It is the essential agreement for freedom, for commerce, for transportation, and virtually any other activity that we do. It allows us to build things, it allows us to grow. Instead of trying to protect us against bad things, privacy rules can be used to create good things like trust. Fact of the matter is, trust is everywhere, even if it isn't obvious. We trust that architects and builders have created bridges that will support us when we cross them. We trust that merchants will accept the small green pieces of paper that we hand over to them. We trust that professionals in our service, such as doctors and lawyers, will keep our confidence. And we trust that our friends will support us and look after us. It is the essential ingredient, not just in daily life, not just in the offline world, but also in the digital world. We place a lot of trust in our ISPs when we trust them not to give out our search histories, but for them not to monetize our browsing habits. For our doctors and banks, which are now on apps such as Practo, to not sell this information to insurance companies or to employment companies. Truth is that without trust, people share less information, no information, or even worse, bad information. They become anxious, bewildered, and suspicious. They lie or self censor. And this is not a situation that helps anyone. It doesn't improve our society, it doesn't improve the services that we are trying to provide, it doesn't improve the state of the future. See, think about we need to start thinking about privacy in terms of its potential to build trust. We need to focus on creating strong social bonds and sustainable, profitable relationships. We have to make sure that trust and privacy serve the interest of commerce, social relationships, and promotion of free expression and political engagement. Thinking about privacy in negative terms is just plain wrong. When people believe that the other party is trustworthy, they are more likely to share, just as they do with their doctors and lawyers, and indeed on their social media. When we share on social media, it doesn't mean that we have no expectations of privacy. We have expectations of privacy to the extent that we expect our words only to be accessible to the people who are in our circle. We do not want our photos looked at by everyone. We do not want our search history or our location history to be available to everyone. When control is handed over to the user, when they can decide these factors completely and truly, then trust is no longer an illusion. It is an actual asset that can help companies monetize their data, and it can help them retain and acquire new customers. Now we move on to the second principle, which is loyalty. Now, loyalty is basically a foundational value for privacy. If we borrow from the law of fiduciaries, we argue that there should be limits on the amount of self dealing that companies have as far as data is concerned. The very fact that they have access to data shouldn't mean that they can do whatever they want to with it. If they choose to do things that are unappetizing or make their users uncomfortable, users will one day or the other move away from them. It is never going to stop. It'll always be a drain. The obligation of loyalty on companies aims to prevent that from happening. See, much of modern privacy law focuses on the harm done. If anyone has to go to court or to go to the authorities and prove that this is why we need more privacy, or this person or this entity violated my privacy, they are asked to demonstrate a quantifiable harm. This harm requires proof, which is increasingly elusive. The For example, those arguing against the regulation of behavioral advertising says show us the harm. Where is the harm? Regulation is unnecessary because you can show us no harm. See, harm is an important concept in our law. It helps us quantify damage done. It helps us get, it helps us put fines on those who err. It helps us provide compensation to those who are in need or those who have been harmed. But it is not the only goal of privacy law. The harm fixation has helped us, has led to a situation where we've come up with ill-fitting theories of harm for privacy. There are many instances where society itself is harmed and an individual is not. For example, an area where free thinking is hampered or free speech is hampered. But this is not an area where you can, point out a clear, cognizable, and individual injury. So you cannot go and ask for compensation. But society in itself has been harmed by actions like these. Many laws are designed to avoid harm, but there are other laws such as, CSR laws, tax regulations that provide incentives for charitable giving and consumer spending. These are designed to encourage good behavior, which is seen desirable within society. Companies can now adopt trust enhancing internal policies, safeguards, and organizational schemes. There are new platforms being developed which will help bring down the cost of data management. I am given to understand that Rainbow itself is about to develop a platform which will help data mapping. And I am quite looking forward to the use of something like that. We have been using other platforms, but are not quite satisfied. These platforms will help bring down costs for businesses as far as data protection and data mapping are concerned by having them outsourced to a entity that specializes in them. And the more competition that exists in this sphere will bring down the costs. It'll make consumers feel more safe, it'll make companies feel more reliable, and it'll create better commercial relationships. In such a case, even if a company accidentally fails to be discreet or protective, there is another checkpoint in terms of a specialized entity that can stop a harm from occurring. Trust and loyalty together are very, very good for business. Companies should be competing to be the most trustworthy and loyal. Companies that earn the trust of their users will get customers that are more loyal and provide more information and sales. Customers should be at the center of fintech, not their product. They should have meaningful access to and control of their data, including data mined from the data collected or derived from the profiles that have been generated by third parties, and information about how it was obtained. Consent should be informed, meaningful, and granular enough to control different possible users. The fintech industry itself needs to step up and develop and implement industry standards on the use of new technology enabled innovations, considering the impact that they have on society and the many benefits that they can bring to the table. They should have clear and robust standards on the use of profiling and other forms of automated decision making. They should have strict limitations on what use this data can be put to, and they have to ensure the circumstances in which data subjects may be harmed, and they should put an end to it. See, fintech's path to compliance will be much cheaper than the traditional path to compliance for traditional banks because they have a lot of many compliances to go through. See, incumbents have thousands of employees, large customer bases, and will have gradually acquired personal data in an ad hoc manner. They don't have properly usable data. They have to sift through it. And in such a case, there is much more likelihood of misuse of data. Fintechs, by comparison, deal with smaller, more rigorously curated data sets. Their employee numbers are lower, and there will be fewer fragmented processes to unpick and reestablish. This means that fintechs can cheaply and efficiently ensure compliance. See, the cost of data protection compliance is not it's not static. It scales closely with business size, which means established players face a much higher compliance cost than nimble startups. Now, I'll talk about an example. Now, one of the most hated names in data privacy at this point of time is Facebook. This was not always the case. When Facebook started out, its biggest competitors were MySpace and Friendster. MySpace offered very few privacy settings. Friendster had next to none. When Facebook started out, its privacy policy was 900 words. At last count, it was around 12,000 words. That is a serious leap from 900 words to 12,000 words. Those 900 words made it very clear to their users that they will not deal with their data, that their data will not be sold off, and it will not be misused. This helped Facebook acquire new customers from MySpace and retain them. So trust and loyalty that was demonstrated by Facebook at that point of time made them the major player that they are. It was only in 2009 that, when they had more or less wiped the floor with their competition, that they started reversing track and changing their privacy policies. And now look at what has happened. Eventually, people have started leaving Facebook in droves. I myself have not posted to Facebook since God knows how long. The fact is, Facebook lost the trust, and consequently, we do not feel loyal to Facebook anymore. Trust and loyalty together can make sure that fintechs and customers can have maximum benefit of the data that these customers generate without causing any harm at all to the users. And indeed, even in cases where no harm is caused, customers do feel at risk. They do feel vulnerable while handing over their data. That risk, that feeling of anxiety can be done away with, and it can be minimized by ensuring strict data protection policies internally. Now, I will not say that it is always for the governments to step in into this. Government intervention is necessary. However, government intervention will never keep pace with financial developments or technological developments. It will be for the fintech sector to stand up and adopt standards and stay true to their principles of data protection and privacy. Companies that can amply demonstrate this, and a few of them have. Let's look at DuckDuckGoose. DuckDuckGo, I'm so sorry. It has made a name for itself despite not being probably the best search engine, but by being the one search engine that respects your privacy. There are many other examples, but I will not go into them. Companies such as MasterCard and Microsoft have now woken up to this reality. Apple itself has started providing customers with more and more privacy settings on their devices. Countries around the world have woken up to the need for regulation. But like I said, it will always be for the industry to stand up and make sure that this gets done in a timely and acceptable fashion. And the companies that do, embody these two principles, trust and loyalty, will be the ones that in the long run retain their customers and survive. Because if you look at the facts, most fintechs die out within their first 3 years. Why is that? Because they're unable to build trust, because they have no loyal customer base. And that is the point that I would like to conclude on. I will transfer over to Dhavalji and open the floor to any questions.
Very
Thank
nice,
you. That
very nice.
was
Yeah. We have got very great feedback, and people are interacting and they're talking about, yeah, two important words that you mentioned, trust and loyalty. Is, I think, very relevant in today's world. And I see that there was one of the comments where they say that the customer is now aware about like data privacy and thing, but still they are clueless about how to protect their data privacy, because each and every fintech, I think, website has different options, and it's like a maze for them. I think
and one more question is about what if already the data are lost, because currently so many datas are selling on a dark web, and kids data and photos are misused on social media. So what we can do to protect our data, because damage is already done. So what step we can do to, like, in future we can protect our data? And
See, the fact of the matter is, one, when we trust a corporate entity or a commercial entity, be they fintech or otherwise, we hand over our data to them and we make ourselves vulnerable. Now, this creates, we are the trusters, and in effect, they become the trustees. However, I would prefer to use the word entrustee rather than trustee because of its own legal implications. They do become the ones who have a duty towards us to keep this data safe. And if and when they do lose access or control over such data, they should be the ones to inform us, to take all the necessary action. See what Upendra ji pointed out with Equifax. or what we saw last year in August 2020 with the Pepperstone, which was a financial firm in Australia, is that companies tend to hide these facts. And when they tend to hide these facts, they breed mistrust amongst their clients. Now, both of these have lost large amounts of their customers. Their valuations have gone down, and they're now trying very, very hard and are investing much more in cybersecurity and financial technology and data protection technologies, which is what I said, that there need to be more platforms which make it possible for businesses to have access to secure data storage, to have access to platforms which can ensure data mapping and data automation within their own organizations, to ensure that they comply with all these laws, that incidents such as these are minimized. However, the entities which are already major players in this field, I am not going to badmouth anyone, but they do leave a lot to be desired for. They are all focused on on the point of preventing harm, which is not the point. It shouldn't just be about preventing harm. It's not about you know saving somebody from a fine. It's about making sure that somebody can demonstrate ample compliance, that somebody can go to their client and say, look, your data is not just secure with us, it is also safe with us, in the sense that we will never deal with it in a manner that is harmful to you, that we will make sure that whatever use it is put to is beneficial mutually,
Right,
that
right,
you
right.
get some value out of it. Now, laws such as GDPR, CCPA, and our own proposed data protection bill do to a certain extent deal with these concerns, but there is still a big gap. That gap, I believe, should be filled in by the industry itself. They need to step in and they need to do more. And the moment they do that, there are many, many, many entities out there, such as the Electronic Freedom Frontier and the Software Freedom Center, who would be willingly happy to provide audit services and to give them a stamp of certification. We need to have industry wide standards which can ensure compliance, which go on to show that privacy policies need not always run into thousands of words, that they can be simply explained to users with a few symbols and a few simple videos.
Yeah, I think, yeah, I like your point that that when you are talking about these terms and conditions, that users or customers you know just don't read it and just they scroll the list and they accept. So rather than that, if it had been like in more like in video or more like in graphical, then they would better understand what they're opting for, how much of the data that this company is gonna use or share. I think those simpler flowchart kind of thing would help the customers to understand better the implications. And you're right, that is also the responsibility of the entity capturing the data to keep it secure and keep it private when they deal within their organizations or outsource for processing or whatever they do. I think it was very much valuable insight from you, and I think the audience is also have liked your presentation a lot. We will surely be in touch with you again for a dedicated workshop on data privacy and compliance, and maybe you can be an advisor on that. So
Look forward to
I
it.
think it was very nice of you to come here and present your
Yeah.
thoughts and knowledge and share with us.
Thank you, Dinkar, to give
Thank you.
your valuable time and share your knowledge about data privacy. And also, still, this topic is never end because we are always at a risk. So we
I think
have
you
to
did a very
find
great effort,
some.
first starting with the
Yeah.
background. You laid out the background of the data privacy laws and what actually it means, and whatever you spoke, almost everybody would here agree that they themselves have been a fintech customer. Although people are
Uh,
here who are
Sometimes
technologists
they are
or
also
tech,
at a.
yeah, everybody is also a user and customer, so they also have those desires that yeah, this is how ideally should be. Yeah. So
Thank you.
thank you very much for that.
Thank you.
Now.
Thank you very much.